Weakness creeps into the market as the Nifty stumbles below the 25,700 mark with over 1% cut on the broader indices. Metals, real estate and durables remain the biggest drags, even as IT sees some relief from the sell-off and the PSU banks lend some support.
Cognizant posted steady Q4 results with revenue up nearly 5% and EPS beating estimates, but FY26 guidance stays cautious with organic growth seen slowing down. Citi remains wary on Indian IT, citing AI disruption, intense competition and weak discretionary spending.
Brokerages remain divided on trend, with Citi maintaining a sell, flagging margin risks and slowing Zudio growth, while Bernstein and Macquarie stay outperform on the long-term recovery hopes. Others remain cautious, citing moderating revenues.
JSW Cement jumped 8% after strong Q3 numbers. EBITDA surged over 90% with margin gains from operating leverage and cost efficiency. The company also approved a $39 million UAE capex and plans to double grinding capacity by 2028.
Dixon Technologies shares slipped after management flagged a delay in its Vivo joint venture and a Q3 slowdown in smartphones, while mobiles remain the main growth driver. Dixon says IT hardware and telecom are gaining traction.
Hello and welcome. You're watching Buy Now, Sell Now. I'm Kavita Thapliyal. With me is my colleague Ankita. And in next 1 hour, we'll be answering your stock-specific queries. And just before we begin taking your queries, let's just quickly flash our WhatsApp number where you can send across your stock-specific questions. All you have to do is just send across the name of the stock, the price at which you bought it, and the timeline till which you want to hold that particular stock. We'll be getting you a technical as well as a fundamental check through our experts. But then before we go towards our guest of the day, let's just quickly do a market check where definitely Nifty and Sensex traded lower on Thursday, snapping a 3-day rally as investors book profit elevated levels. We are looking at broader markets also mirroring a weaker trend to trade under pressure. So broad-based weakness, selling pressure across cyclical and rate-sensitive sectors. We can see metals, reality, auto, consumer-facing segments are really dragging the sentiment, and this reflects a risk aversion also. Defensive pockets such as FMCG, IT and PSU banks are providing limited support, but then yes, the overall tone of the market is suggesting a cautious stance amid uncertain macros and global views. Let's just look at a few stock-specific actions also over here, which are dampening the sentiment of the market. We are looking at MCX almost down more than 4% under pressure due to volatility in gold and silver, especially along with other metals. Nifty metal is also down more than 2%, as we can see right now. We have to understand that MCX silver has tumbled down, almost 2.44 lakh, and gold also slides almost to 1.51 lakh. That's the reason why we are looking at MCX cracking down. It's almost down 5.5% also right now. We can also look at some volume buzzers, where IFCI, IDBI Bank, Yes Bank, Devyani International especially, and JSW Cement also, in one of the top gainers in the volume buzzers. Devyani International shows almost 8% on Jeffries buy grade, and one has to mention the target price, which is almost 145. It's unchanged. Look at JSW Cement also almost up 8.5%. Devyani International almost 9% up. But then let's quickly get a tech check from our guest, and today we have Kunal Bothra joining us live. Kunal, hi. Morning and welcome to the show. See, there's overall weakness in the market. Definitely the sentiment has, slowed down. But there is stock-specific action, especially the Q3 result-based action. How are you looking at the tone right now of the market?
Yeah, I think after 2 days of a steady uptick, I'll say for the index, a couple of days back, there was this very sharp and a strong gap up for the indices, and we managed to move from sub 25,000 to 25,750 mark. And even yesterday's session where, even after the kind of damage which you've seen for the IT index, we've still managed to hold on to the 25,750 levels broadly. So I think after those 2 consecutive days of strong price trends for the indices, it's, an obvious sign that the markets are taking a bit of a rest over here. I would still believe that the larger trend for the index is still positive. I think now we should be at a zone where the markets would start following global cues. Global cues today, I think, is on the slightly negative side. And that's why I think our markets are also reacting more or less or trying to mirror the global cues. So net, the view on the index still remains on the bullish side. In case if we drop down to 25,500 for the index on the spot levels, that could actually throw in a good opportunity to try and initiate contra buy positions for the index futures.
All right, so that's the word coming in. Now perhaps the market will start mirroring the global markets, and we did see the negative bias coming in on the global markets, and therefore we do see that coming in on Indian market as well today. But it's now time to get started with the show, and where we get all your questions answered. And of course, you can write in to us. The number is flashing on top of your screens. Please start writing in your questions, and we'll be taking them as of now with Kunal. Now, first question that's coming in for today is by Rajesh Maheshwari, who's writing in from Indore. He says he wants to know about HAL. He has 60 shares that he's bought at a buying price of 3,725. How is the bet going to be for the short and the medium term for the stock, and whether he can add or book profit on the counter HAL? Kunal, HAL today, of course, is down 4.5%, more than 4.5%. It's on the back of that news that they have exited from the India stealth jet, fighter jet project. On the back of that, we see that drubbing coming in on HAL. But on the charts, what do you suggest? He's bought it at a buying price of 3,725. He's sitting at a profit right now. What would be your advice?
See, I would suggest to stay put for HAL because what's happened is in the last 3 or 4 days there has been almost like a 10% plus 15% correction for HAL from 4,600 levels towards 4,000 mark, where the stock has suddenly corrected. Of course, on the back of a few news flows surrounding the stock price, but these are part and parcels in terms of trends for the stock. Just about a month and a half or back, HL was trading at 4,800 plus levels. So the stock has this capacity to try and make a strong comeback. Since you've purchased at lower levels, I would probably sense that you have a buffer which is in place. There could be some bit of more volatility, mild bit of more correction for the stock in the next couple of days. But then eventually there would be a point where the stock would look very attractive. Case in point, for example, at current levels of 4,000, 4,020 for HAL, the stock is already at a 500-point divergence from its long-term moving averages, 200 DMA in that case. So it starts to look attractive at current levels, but maybe a mild bit of more downside. The stock could look very attractive. I would suggest a hold.
In HAL, there's a hold that's suggested by Kunal. Kunal, there's another question coming in from Swati, and she's a long-term investor, but she wants an advice on Dixon Tech and PG Electroplast, where she has almost 30 to 40% losses right now. Is there any hope of revival? She plans to hold it for long, but then she definitely can't stay in such deep losses for a very long time. So what's going to be the strategy? If at all you are recommending a short-term exit, what could be the stop loss that she should be taking care of in both these counters?
Yeah, so it's a tricky question, Kavita, because both of these stocks, Dixon as well as PG Electroplast, I think have gone through a very sharp correction. But then you'll have to look at the history prior to that. Both of these stocks had done fabulously well going into from those 2020, 24 kind of a time period where these stocks gave returns of almost 5x to 10x. Now, in this kind of a scenario, it's bound to be that these stocks would probably go into a time-wise correction. I would actually expect that if you are not looking at holding on to the stock from a long-term play, say for the next 3 or 5 years, then I think it's going to be a bit tricky because there could be a possibility that the stock may drag, underperform for the next 1 or 2 years at least. So I would suggest that use rallies for the stock price as an exit rather than taking this as a stop loss. We saw a decent rally, I think, for Dixon Tech and PG Electroplast in the last 1 week or 10 days, almost like a 10% recovery from their recent swing lows. There could be a possibility of another 7 to 8% recovery in the near term. That could be a point where you may look to exit the stock unless you're looking to extend this time horizon to long term.
All right, so every rally and Dixon should be looked at for exiting the position. That's the word coming in on Dixon Tech. Kunal, thank you so much for that. We will let you go on that note. But speaking of Dixon Tech, we also spoke to Saurabh Gupta, who's the CFO of Dixon Technologies, to understand how the 40,000 crore rupee component incentive scheme changes their margin outlook. Let's listen in.
We are committing an investment of closer to 2.5, 3,000 crores. And we have already got two approvals. Two approvals are in the pipeline. So we feel confident that we should be able to leverage this component PLI scheme to the maximum. We already have a large order book in our mobile business and IT hardware business where we are really focusing on these components. And as far as the PLI is concerned, that's an over and above separate budget. So government is definitely engaging with the industry for its extension. To say for sure that will get extended, it's very difficult, but definitely there have been deep discussions between the government and the industry. And it feels like that the government wants to give more support to the sector till the time the component ecosystem gets evolved or gets created in the country.
All right, so that's a commentary coming in from Dixon Tech Management, and the stock is also down more than 3.5%. But then it's time for a short break on Buy Now, Sell Now, and post that we'll be focusing on more management commentaries on their Q3 results.
Welcome back. You're tuned in to Buy Now, Sell Now. I'm Ankita Saxena, and we are in the thick of earnings season. And one of the earnings candidates that has posted a strong set of Q3 results is Choice International. In fact, they have posted strong multi-year growth trajectory with FY21 to FY25 CAGR of 52% in revenue growth, 70% in EBITDA, and 77% in PAT. Strong set coming in there for Choice International. And now we are joined by the management to weigh in more on the numbers. Arun Podar, Group CEO, plus we have Ayush Sharma, who's the finance controller of Choice International, joining us. Hi, good morning to both of you. Thank you so much for joining us. My first question coming to you, Arun, is the fact that your revenue has diversified across broking, there's advisory, there's NBFC and wealth. Which segment do you see as one of the earnings engine for you for the next few years, and why will that be driving your revenues?
So, good morning, Ankita. And certainly, if you see the past track record also, as on date, almost 58% revenue contribute from the broking and distribution, and almost 28% revenue contribute through the advisory. So, in a longer run, if you ask me for next 2 to 3 year timeline, the broking will again work as an anchor product only and will lead this revenue model surely in next 2 to 3 year time also.
Sure. Hi, good morning, gentlemen. This is Kavita also joining in. And Ayush, I'll come to you now. Let's talk about PAT growth. Ayush, PAT growth is running well ahead of revenue growth. Now, just to help us understand how much of this is operating leverage versus one-offs or a mix improvement.
So, Kavita, largely this is operating leverage only. There are no one-offs during this particular quarter specifically. This growth in PAT is driven by the increased client activity in the broking business. So if you see our margin expansion in broking and distribution business segment itself, our margins have expanded by close to 8%. And in advisory as well, our margins are expanded by close to 9%. Both of these places, our fixed costs are not increasing, and the operating costs are also at the stagnant level. Higher the client activity, higher the business we generate in the broking business, this margin is going to further expand, right? If you see, our ADTO has also expanded in the broking business by more than 20% on a QOQ basis and approximately 27% on a YOY basis. This has led to a growth in PAT, which is more than the growth in the revenue. So these are the larger reasons for PAT expansion.
Right. Arun, also tell us, you have your growing client base in the young and tier 2, tier 3 cities. How monetizable is that client base in the next 2 to 3 years?
Sumita, if you see, our major clientele base are situated in majority in the 2 tier cities to 4 tier cities. So in terms of their client, their LTV or long lifetime value is much higher rather than the metro city client and the other clients. So we feel the client will remain or will continue in the same gesture. And over and above, since we have multiple product line also like the wealth distribution and others, so the revenue model will increase. The revenue per client will also increase in next few years, we can say.
Ayush, just to understand the IPP model partnership, that gives you a massive reach. When should investors realistically expect revenue contribution, and what margin profile are you also looking at?
So the IPPB partnership is basically, a collaboration with the two large, the financial services organizations in this country, right? IPPB has a very strong distribution network currently. They have 1.8 lakh post offices, almost 2 lakh postmans, and IPPB itself has 12 crore customers who are utilizing their savings bank account, current account facilities. Now, the job of Choice Wealth is to provide them the complete investment solutions through digital means and through the expansion on their distribution centers as well. So the project is overall for 5 years time. Currently, for the initial 1.5, 2 quarters, we will be in the establishment phase where we will be integrating the IT systems. We will be, reaching out to their distribution centers and doing the training of their team. Post that, we will see good traction coming in, and the margins will keep expanding. So currently, as I mentioned, that we have built the platform where the base is ready. Whatever new addition is coming in will largely contribute towards the profit only. So very less operational cost is there going forward. So we will see a large contribution towards the profits from the business coming in from the IPPB contract.
Tentatively, just want to add on this aspect. From Q2 onwards, from next financial year, from Q2 onwards, we can expect some kind of a decent revenue from the India Post Payment Bank also.
Taken, Arun. Also, Arun, your wealth AUM has grown over 3 times. How much came from the acquisition versus organic client traction?
So if you see, we have acquired 3 large distribution network. So if you ask me about 328% of the growth in terms of AUM, so in our existing the organically growth plan, that is almost 50% growth in terms of our organic businesses, and the others are from the inorganic side only.
All right, with that, it's time up. Thank you so much, Mr. Poddar and Mr. Sharma, for talking to us today about all the numbers. Thank you so much.
Thanks a lot. Thank you very much.
Well, then let's move on, and very important news coming in. Sources say that Sir Ratan Tata Trust may hold a key board meeting in mid-February. Now, with the possible induction of Neville Tata as a trustee on the agenda. Anurag Joshi joins in with the exclusive. Anurag, what's the exclusive information coming on this?
Sources have told ET Now that the next board meeting of Sir Ratan Tata Trust, one of the 2 key trusts of the Tata Trust, will be held in mid-February. And one of the key proposals on the agenda of the Sir Ratan Tata Trust, when the board meeting is held, will be the appointment of Neville Tata as a trustee on that trust. Now, Neville Tata, who is the son of Noel Tata and the former managing director of Titan, Bhaskar Bhatt, were appointed as trustees of Sir Dorabji Tata Trust on November 11. And subsequently, there was an effort last month in January 17th was the last scheduled board meeting of Sir Ratan Tata Trust to appoint Neville Tata as a board member at that meeting. But that meeting was abruptly cancelled. And if in the following board meeting, Neville Tata is appointed as trustee, it is seen strengthening the hands of Noel Tata within the Tata Group. The Tata Trusts own a 66% equity stake in the Tata Group, in Tata Sons, and which is the holding company of the Tata Group. Separately, Pramit Javeri, who is a trustee on Sir Dorabji Tata Trust, in a letter to Noel Tata recently, he has expressed his desire not to seek reappointment as a trustee when his term comes to an end on February 11.
Right, Anurag, thank you so much for joining us with that exclusive details coming in on that Tata Trust board meeting. But we'll move on and bringing the budget discussions on ground. ET Now is hosting the India Investment Summit in Mumbai this Friday. Thought leaders, visionaries, policymakers, investors, MSMEs and innovators will unravel the union budget of 2026, analyze its impact and chart the country's economic direction for the year ahead. The summit puts the spotlight on India's BFSI sector at a pivotal moment between tariffs, currency valuations, the union budget implications, and forthcoming financial year. Tune in to ET Now India Investment Summit.
Tata Power posted a mixed Q3 with revenue and EBITDA missing estimates, but profit beating expectations. Renewable and EV charging stayed strong, even as Mundra losses weighed. Meanwhile, Cummins India delivered inline revenue and margins, but profit missed on weaker exports despite resilient domestic demand.
Bharti Airtel is seen delivering a steady Q3 growth as EBITDA is expected to remain strong despite a slight margin dip, even as ARPU is expected to edge up on the better pricing and subscriber additions. Focus remains on wireless growth, postpaid momentum, and tariff commentary.
Tata Motors PV business is likely to see a mixed Q3 with revenue down 3% sequentially, but margins improving. JLR remains a drag with a likely EBIT loss. Street remains focused on JLR guidance, India margins, and new launches.
And Marico has acquired a 60% stake in Comix for over 200 crores, valuing the plant protein startup at 375 crores. The deal strengthens Marico's premium nutrition and D2C portfolio, adds exposure to the fast-growing wellness categories, and fits its long-term digital scaling strategy.
Welcome back. You're watching Buy Now, Sell Now, and let's get across some very important comments coming in. External Affairs Minister S. Jaishankar met U.S. Secretary of State Marco Rubio in Washington, welcoming the trade deal and exploring deeper cooperation in critical minerals. The talk also covered defense, energy, technology, and regional issues. Listen in.
Well, we did yesterday a fairly detailed review of our bilateral cooperation. So, it's natural when foreign ministers meet that you discuss what's the diplomatic agenda, also the calendar, what do we expect each one of us to do this year together. So a lot of our discussion was devoted to that, the bilateral side. But again, look, foreign ministers meet, we talk our business, it's Indo-Pacific, it was what was happening in West Asia, Middle East, Gaza, etc., Ukraine conflict. So there was a kind of a global review, also what was happening in the Western Hemisphere.
And well, with that, it's time for a quick breather. Don't go anywhere after the break. We are getting you more managements on the other side. Stay tuned. Welcome back. You're tuned into Buy Now Sell Now, and we are now joined by yet another management on the back of Q3 results. And this time, you're joined by Mr. Mayank Agarwal, the CEO of Gallant Ispat Limited, who's now joining us on the results. Hi, Mr. Agarwal. Thank you so much for joining us. Mr. Agarwal, as I can see, your revenue has declined 4% on a year-on-year basis, and on a sequential basis also, it has remained very flat. What led to this fall?
Hi, good morning, and to you and to all your viewers, ma'am. Yes, revenue on a quarter-on-quarter basis, there is a decrease of about 4%, which is about 1,000 rupees a ton. And this is basically due to very low demand and pressure on the sales part in general in the steel industry in the last quarter. And we saw the anti-dumping duty again being extended by the government and enforced because of these reasons. So last quarter for a steel industry was not that great in terms of demand and realizations, and this decrease is basically due to that. However, when we compare our results on a year-on-year basis, so you will realize that EBITDA in absolute terms has increased by more than 10%. In last year, it was 515 crores, which is about 567 crores in 9 months this year. So there is a considerable jump in EBITDA, and there in absolute terms also, and in per ton of steel produced also. Which till last year, the average was about 8,000, and this year the EBITDA per ton is 8,750. So there is an increase of about 9% in EBITDA. And this is basically due to the continuous capex on operational efficiencies, cost reductions, capacity utilization that we have been ongoing, because apart from capacity additions. So I would say that last quarter was, although there was a little bit of pressure due to reasons explained, but if we compare the performance of the company on year basis, I think it's very nice, with a reasonable jump in EBITDA per ton in absolute as well. And even in PAT, if we say, there is an increase of about 20% year-on-year basis. So I think we are very well placed in terms of the overall performance of the company on Y-on-Y basis.
Right, but then Mr. Agrawal, let's also talk about the expectation. Now, do you expect them to recover in Q4 FY26, or we are talking about recovery happening in H1 FY27?
Right from the beginning of Q4, in Jan first week itself, we have seen a very reasonable turnaround. And the entire Q4 till now has performed exceptionally good in both in terms of demand scenario and both in terms of price. So we are very happy with the way things are going in Q4, and we see exceptional results in Q4 if everything goes well. And there would be I feel that there would be a substantial increase in the entire year's performance compared to last year post Q4 results.
Mr. Agarwal, also tell us, how has your demand been across segments and across product categories, your sponge iron, the MS billets, the TMT bars?
So demand in Q3 was very lagging a lot, but in Q4 it is exceptional. And also, we are not selling any of the semi-finished product, intermediary products. So we are only into selling of the finished product, which is TMT bars. And because in the last couple of years, with various celebrities and brand ambassadors like Ajay Devgan, etc., company is very well placed in the market in terms of brand positioning and in terms of demand. So that side, even in Q3, from personal perspective, company did not feel a lot of heat, because at least we were able to liquidate our production smoothly. The only problem was the realization, which was beyond our control. And keeping the EBITDAs intact and stable for a longer forecast in future, the company has plans of about 3,000 crores of capex, which we plan to mostly fund from internal accruals. And
sure. Mr. Agrawal, quickly, given the Q1 and Q3 trends, what is your guidance for revenue, EBITDA margin for FY26, and what about FY27 then?
It is being in steel industry is a little difficult to have a very long-term perspective. But in general, due to heavy spendings in infrastructure and the way things are going with the government in terms of budget, in terms of industrialization and manufacturing focus that the central government has, and being in two major markets of India, which is UP and Gujarat, where our manufacturing facilities are and where most of our product is getting consumed. And as you are aware, both these states in itself are very strong with their infrastructural spendings, etc. I see a very bright future for steel fraternity in the next couple of years. And besides that, what basically as a company we can do is to further integrate our processes, reduce our dependency on the market in terms of raw material, and improve our operational efficiency. So on those aspects, company is working a lot. Just in current year,
Right.
we have acquired 2 iron ore mines and for UP in UP and another mines in Rajasthan. So
Right.
we are working on complete end-to-end integration, reducing our cost efficiency, improving our efficiencies while adding capacities also.
Right, point taken, Mr. Agarwal, but we are completely timed out on this, that discussion. We will let you go on that note, but thank you so much for taking the time out and
Thank
joining
you.
us on ET Now. But well, we are now joined by another management on the back of Q3 results. Cummins India, that is actually surging in trade right now with gains of almost 4%. We are joined by the management, Shweta Arya, who's the managing director of Cummins India Limited, who's now joining us. Hi, Shweta. Good morning, and thank you so much for joining us. Shweta, you know, while the revenues have remained flat, the management has indicated at a domestic double-digit growth for FY27. What are the key drivers behind that expected subsequent recovery in FY27?
Hi, good morning. So yes, as you rightly pointed out, for financial year 26 and the financial year after that, we are looking at double-digit revenue growth for the company. Largely, our company operates in segments which are impacted a lot by government infrastructure expenditure and then economic activity in the country. So both of those are favorable at this point in time. As we have seen in the budget announcements, the infrastructure outlay towards different segments definitely gives us opportunities in the future. And then the economic activity, the GDP growth itself, 7 and above 7% as we are anticipating, that all the segments in which we operate gives us opportunity. So because of those, in the domestic market, definitely, we are anticipating double-digit growth.
Sure. Shweta, what kind of pressures on the EBITDA margins are anticipated now due to the volatility in the commodity markets?
So from a commodity perspective, largely copper has been increasing a lot. And copper is a key ingredient in a product called alternators, which our associate company sells. So there will be challenges on that front from our associate company perspective. From Cummins India Limited perspective, steel and iron have largely remained stable. So commodities, other than copper, as of now, we do not anticipate too much changes. EBITDA margin pressures, yes, there is greater competitive intensity in the country, in the domestic market. So that obviously is something which we need to manage. And then exports have stayed lumpy over the last few quarters with no clear trends emerging from the markets that we supply to. And those can cause certain ups and downs going forward. And those could lead to challenges in the EBITDA margins.
Right. Brother, your outlook on rail has been positive. What kind of changes in the industry clientele mix do you expect in the future?
So our expectation on the rail segment has been positive because of the outlay by the Indian Railways in the last few quarters and continued investment going forward. So in the applications where we provide our engines, we have seen orders come in, and we continue to see the order velocity. And that is what gives us the optimism and the confidence in the railway segment.
Shweta, in the light of recent announcements on trade deals with the USA and EU, let's just talk about the impact. What impact do you anticipate on your international market exposure?
From a Europe perspective, like many other countries in the world, we have exports to Europe. We are evaluating the impact of the EU trade deal, largely looks to be positive. With the US, very new. We are looking at the impact, but like I said, exports for us is across the world: Africa, Middle East, Latin America, Asia Pacific, Europe, and the US. So it's a mixed bag for us. We are evaluating what the US impact will be.
Shweta, also, what would be your budget feedback in the light of the tailwinds around the data center segment?
The data center announcement is positive. Giving tax breaks to organizations who want to set up data centers in India is definitely a positive move. What we need to do more as a country is we need to look at processes as data center players set up their operations in India, and how we can provide simpler approvals to them, easier, quicker, simpler approvals, so that we help the data center market grow in the country.
Shweta, now taking a cue from the entire scenario that's developing for railways, I just wanted to understand, since we're talking about an industry eco-center, and we're talking about, having a better infra around it also, making it, par with the international markets, what are the gaps, according to you, which can be filled or in a layered way after the budget, what all has been announced?
I thought you asked me the question about Indian Railways. Indian Railways is actually ahead of many other railways in the world. We are very close to electrifying all our railway tracks. We're very close to almost 100% electrification. And that is not that can be said about many other railways in the world. So investments in railway infrastructure steadily have been there, and there has been upgrade in terms of the trains in the last few years, which continues. From an other segments perspective, definitely data centers is something where we can, like the tax breaks, we can think through easier site approvals. We can think through some of those areas where we can help improve activity in these specific segments.
All right, Shweta, on that note, thank you so much for joining us and giving us the growth roadmap ahead and being in the numbers for Cummins India. But with that, we're completely timed out on this edition of Buy Now, Sell Now as well. Kavita and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.